Hello students, welcome to my financial statements video tutorial. Today we are going to see about financial statement analysis. In that specifically we are focusing on comparative financial statement analysis. First of all, we should understand what are the financial statements available in the market: balance sheet, cash flow statement, and profit and loss. Profit and loss, other name is income statement. These are the financial statements which are available in the market. Usually the investors will go through these financial statements and do the analysis process to understand whether the company is in a good position or not. Based on the suggestion of financial statement analysis, they will do the investment. Now we are going to see about comparative statement analysis. There are tools of financial statement analysis or different types. One is comparative financial statements, common size financial statement, trend analysis, and ratio analysis. In this video tutorial, we are going to see about the following thing is comparative financial statement analysis. First, we are going to do a comparative financial statement analysis on the balance sheet. First, we should understand about the balance sheet structure. Balance sheet structure will consist of three items. One is assets, another is liabilities, and another is stockholders' equity. So, asset section will consist of two things. One is current assets and the fixed assets, which is also called as non-current assets. So, total assets will be the sum of current and non-current assets. And then liabilities also we have two things. One is current liabilities and non-current liabilities. So liabilities will be the sum of current and non-current plus stockholders equity. So balance sheet is based upon the equation is assets is equal to liabilities plus stockholder. If you sum up the assets together, total assets will be this amount. Similarly, if we sum up the liabilities plus stockholders equity, it will comes around 1,01,000. So if you see that it will be in a balance sheet, assets will be equal to the sum of liabilities plus stockholder equity. So next we are going to see about the illustration problem of one, which is having a comparative balance sheet of Deepa Limited we have to prepare. So we should understand what are the items they have given, and then we have to put this item under the subcategory of balance sheet. So we basically go through that. The balance sheet will have assets and liability and stockholders. Among the assets there are current assets and non-current assets. If the items are not given in which they belong, we have to understand the item belongs to which thing, whether it is a current or non-current, and we have to do the posting on the particular category. Now in this, let's go through this problem. Illustration 1. From the following information, prepare a comparative balance sheet of Deepa Limited. They are given the particulars for the 2 years they are given. One is 2011 and the other is 2010. So they have the items like equity share capital, fixed assets, resource surplus, investment, long-term loans, and current assets and current liabilities. First, basically, before going to a balance sheet, we should know understand the balance sheet equation, which that is assets is equal to liabilities plus shareholders equity. So assets will be equal to the sum of liabilities plus shareholders equity. So first we have to derive the balance sheet. So balance sheet will be based on the final year, that is 2011. So we have to mention as comparative balance sheet as on 31/3/2011. Next we have to form the table. Table will consist of particulars and we have to mention 2 years. Always mention the previous year as 2010 as first thing and then the current year 2011. So we have to mention as the first year as 2010 and previous year next year will be 2011. Okay, then we have to go for the assets section. Just we have to go through what are the assets they are mentioned here. Here they are not categorized into subcategory. They are given directly as fixed assets, current assets. So first we are taking as current assets from the problem and we are just noting down. This is such a simple problem for a basic understanding. So these values are given directly. Then we have to add just the values from the table to our balance sheet equations. So current assets, what they are mentioned is one is 30 lakh and another one is 21 lakh. Okay, I have entered the detail. Then we have to understand what is other assets which they are provided. Assets is kind of an investment. Investment is also an asset. So we are taking from the given details investment to the assets. Investment is same value in both years, that is 10 lakh. So just adding 10 lakhs at both ends. Next we are going to see about any other assets given. Now see, there is a fixed asset which value of two things they have provided, since we have to enter the fixed assets. Fixed assets, one is 60 lakh and another one is 72 lakh. So now we have to calculate the total assets together. The total assets of 2010 and total assets of 2011. So total assets I have calculated. Next we have to go to the liability sections. So liability section will have some two things. One is current and non-current liabilities. Now just go through what are the things they have provided in the problem for under liability section. In that they are directly mentioned as current liability and long-term loans are the liabilities. There is no other liability item here. So first we are, if it is a non-current liability, it comes around long-term loans. So long-term loans comes around this liability. So I'm just adding long-term loan. Long-term loan will have value 30 lakhs each. So for the both years it's same. So just entering this 30 lakhs at both ends. Next we have to know other liability called current liability. Next we have to see what are the other liability available in the given problem. Next they are mentioned as current liabilities. So it comes under liability section. So I'm adding this current liability. Current liability mentioned as 10 lakh in one end. So I'm just posting 10 lakh here and another is 11 lakh. So adding these two things. Next I am going to do the total of long term and short term liabilities, that is 30 lakh plus 40 lakh, 10 lakh, 40 lakh. Then here I also doing the same sum for the year 2011. Total liabilities I have done. Next I have to understand this problem to know about anything like shareholders equity mentioned. So shareholders equity is mentioned in two things. One is equity share capital and another one is reserve and surplus. So I am posting these two values here. One is equity share capital. Equity share capital is 50 lakhs for both the years. So I am just copying as 50 lakh here. Next is we have to understand what are the items, that is reserve and surplus. It comes under shareholders equity. So reserve and surplus is, so one is 10 lakh and another one is 12 lakh. I am posting these two things. So next we have to calculate the total shareholders equity, that is 50 lakhs plus 10 lakh, that is 60 lakhs. Here it's 62 lakhs. Next we have to do the sum of liabilities plus shareholders equity. So sum of total liabilities plus shareholders equity comes around 1 crore. So then we have to compare the both things. What is the asset equation? What is the balance sheet equation? Balance sheet equation is assets plus liability. Assets is equal to liabilities plus shareholder equity. So what is the asset here? It is a total assets. Total assets is mentioned here. This should be equal to the sum of liabilities plus shareholders equities. So if you see, it will be equal. So now the balance sheet is completely balanced. So what are the items which we have entered in both sections, assets and liabilities are equal. Then we have to proceed with our problem. Then only we have to do the calculation for comparative balance sheet. Comparative balance sheet is based on this formula we are using. First we have to record what is the change, that is the absolute change. Absolute change is equal to current year value minus previous year value. Current year here mentioned is 2011. Now previous year is 2010. First we have to do this absolute change. Find this absolute change. Absolute change's value is current year minus previous year. Just subtract. So the change will be either a positive value or a negative value. Do this absolute change for every values. 10 lakh minus 10 lakh. It can be 0 too because there is no change. It indicates it can be a positive change as well as it can be a negative change. So just record all the values, do the same thing. For all the values, apply the same formula. These values are not recorded, so just ignoring these two values. In this way, we have to do the change. We have to calculate the changes. You see formula, current year value minus previous year value. Next, we have to calculate the percentage of change. Percentage of change is absolute change divided by previous year. What is the previous year value? Is 2010 value, that is 30 lakh into 100. Here they are mentioned in terms of amount. Here we are mentioning in terms of percentage. So percentage of change should be mentioned in terms of percentage. So it's minus 30 percentage. Similarly, you have to do the same calculation for all the items. Remove the unnecessary items. So now we are very clear with how to do the percentage of change. Percentage of change formula is absolute change by previous year value into 100 percentage. So we have to do the entries in the balance sheet based on assets and liabilities, and then we have to do the balancing thing, that is assets is equal to liability plus shareholders equity. On the sheet is balance, then we have to do the calculation for absolute change. Absolute change is based on the formula is current year value minus previous year value. So we have done the 2011 value minus 2010 value is absolute change. Same thing we have calculated for all the items. Similarly, next we have to do the percentage of change. Percentage of change formula is absolute change by previous year value into 100 percentage. So absolute change is 9 lakh minus 9 lakh divided by 30 lakh into 100 percentage. That is by giving a value of minus 30 percentage. Since the change is in the negative, the percentage of change will also be negative. If it is positive, the percentage of change will be positive. Similarly, we have to calculate the all the thing. Based on the percentage calculation and change calculation, we have to do the interpretation of how the DPA limited performs as per the thing. So that we have to do the interpretation section. Interpretation section, we are noting down the outcome. Based on the comparative balance sheet analysis of Deepa Limited, there is a growth in the fixed asset by 20%. First, we have to go and check with fixed assets. Fixed asset is that there is an improvement from 60 lakh to 70 lakh. Percentage of change is 20%. So a company have invested amount in buying a new set of fixed assets. It can be a land or in equipments, something a fixed asset they have done. So that shows a good sign. They are having a amount in surplus to do this kind of investment. This investment can be either for expansion or it can be an investment for their interest earning. So there is an increase in case of 20%. So I'm just recording a 20%. And also the company have a reserve and surplus of 20%. It's a good sign. Next we have to see with the reserve and surplus section. It's also positive 20,000. Initially they have a 10 lakh here at 2010. Now there is 12 lakh. There's 2 lakh. They have additional kept for reserve and surplus. These amount which are kept for reserve and surplus are the amount which can use it for an emergency function, or in case of paying a dividend they use this kind of reserve and surplus amount. This for owner's thing, not to handle any kind of emergency kind of situations. These things which indicates that they have a good resource to handle the unexpected expenses. Next, we have to understand what are the things which have decreased and increased.